Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This is all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. Okay, so just to remind you once more, and it is a timely reminder given what happened 3 weeks ago, as I've said here repeatedly in this commentary for months and months, the most significant feature of this market has been the key lows of 2021 at 15,665, which led to lows of late November 23, plus the lows in 24, and I suppose also the congestion this year in January, February, late April, May, early June, and the high 3 weeks ago. I'd also add that for many months I had also highlighted how the 15,840 level, along with this low for 2021 at 15,665, was and is still a key level. So at 15,665 we saw moving down through it 2 weeks ago the gold long moving average, currently 15,575. Whilst a few weeks earlier we saw the significant bright red upper time, currently at 15,465, of the early October 24 to mid-March 25 bearish shift pitch hawk, along with the mauve medium moving average, currently 15,395, also moving down through it. These are now looking to challenge the next congestion below each of them, that is for now above the market, and that is the 50% Fibonacci line for 2025 at 15,325. Finally, we have the close into the market last week acting as resistance, and this week looking like it's acting as support, the declining green short medium moving average, which is currently at 15,205. As I've repeatedly said before, altogether some of these are some pretty heavy duty resistances which had earlier capped the market. Meanwhile, 2 weeks ago prices chose late last week to test a recent congestion zone below from about the 50% Fibonacci line at 15,325 down to November 2020 low at 14,935. The market pierced this support but did not stabilize below it, though it still looks very vulnerable right now. So if we take a step back, I said over the last 4 weeks, and I quote, "Over all of the recent actions, we have the bright red early October 24 to mid-March 25 bearish shift pitch hawk in charge. The question is whether the bright red upper time can withstand the pressure building up to challenge it. If it does, then, as I said last week, so that's now 4 weeks ago, and I quote, the hesitation we saw in April and May ahead of the 16,000 to 16,780 area was enough that we can look at the mid-April to end May action as a double top pattern, Eve and Eve type. 7 weeks ago, so that's now 10 weeks ago, we reached and breached the neckline for this pattern down in the 15,200 level, just below the 50% Fibonacci line for 2025 at 15,325. End of quote. I further added, and I quote, you would need confirmed consecutive closes below this level to contemplate the downside. But whilst I cannot set targets below, I can indicate potentials. Thus a primary potential after a confirmed break low would be down in the 14,835 zone, so not too far, whilst a secondary potential low will be down in the 14,380 zone. I say again, these are just potentials, but ones that might come about as targets if a move lower happens before I get a chance to comment next time. End of quote. 8 weeks ago we tested lower to new lows at that time, and leading me to clarify the status of these two potentials. Thus we have a primary target reached 4 weeks ago down in the 14,835 zone. For secondary hard has reached target X1 down at 14,380, which is still live. I added to this 2 weeks ago, and I think these comments still matter, and I quote, the secondary target X1 is once more, if not directly under threat, then in the region of being threatened. Only a concerted move over and subsequent stabilization over the combination of the bright red upper time and the gold long moving average would lead me to reassess the viability of this secondary target X1 that is below. End of quote. These words still stand, and I watch the market and the bright red upper time with great interest now. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is a thoroughly broken, but even now, still refusing to die, old dark blue May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines. This one still will not die. Even when I thought 18 weeks ago that it had finally expired, it came back like a high functioning zombie, influencing and impacting the market, especially the dark blue lower tine, which is currently at 26.93, and more recently the dark blue middle tine, currently 28.57, which had the declining gold long moving average, currently at 28.29, crossing down through it 2 weeks ago. Next we have the bright green mid-December 24 to mid-March this year bearish shift pitchfork. Prices 4 Fridays ago broke clear up and out of this pattern, and despite a dip down to retest the broken bright green upper tine late 2 weeks ago and again early last week, have seemingly started to stabilize over it. These actions, as I said last week, put this pattern on notice of being retired. Meanwhile, looking below, well, as I said 9 weeks ago, and I quote, I keep an eye upon the declining green short medium moving average, currently at 27.34, and the mauve medium moving average, currently at 27.19. Plus, what I suspect may be a key level, and that's the 50% Fibonacci line for the whole March to April move at 27.55. Now, this is not the whole of the 2025 action, just the whole of the major move in the last few months. End of quote. These three in the past acted as a base of action for the last sweep higher and did the same again last week. However, over all of this, I said 4 weeks ago, and I quote, so we are finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So, is it a basing action for a possible future attempt higher, back up to the broken dark blue upper tine, which is currently at 30.22, or is it a hesitation, a somewhat large hesitation, with potential down to the 23.10 zone? Right now it's not easy to say which, but I keep an eye on the following: the bright green bearish shift pitchfork, the short medium and the medium moving averages, and the 50% Fibonacci line for 27.55. They all have given a clue to a somewhat bearish future. But this has been countered by the big old dark blue lower tine, which is still here. And that's the end of the quote. The big old dark blue lower tine lit the fuse for the latest attempt higher late 3 weeks ago. But the then combined overhead gold long moving average and dark blue middle tine dropped a whole load of sand, extinguishing it 3 weeks ago. And as I said last week, and I quote, may have extinguished, at least temporarily, the bullish incentive. End of quote. The question I now raise is whether the nascent reactionary move back up seen last week is enough. I can quote from my commentary from last week when I said, and I quote, if, as I suspect right now, we may not have enough to make a higher high than the one we saw 2 weeks earlier, well then, pressure on the downside beckons. But if we make a higher high, and even if we pull back from that, well, then the opportunities on the upside, especially the dark blue broken upper tine, well, they look more promising. End of quote. Oh, and actually, one more bit. Watch this space. And that's the end of the quote. Now, this outlook still remains the same. Watch this space. LME 3-month tin. Okay, so the big picture here has been centered for quite a while on the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We're in between the lower tine below, currently at 30.525, and the middle tine above, currently at 35.310. In truth, closer to the underside of the middle tine. Now, as I've said here many times before, much like some of the other metals I've discussed here today, there are a number of patterns here affecting the market all at the same time. From the bottom, we have the low of April and 2025 so far down at 28.925, just below the July 2011 high at 29.005. Next, we have the flatlining long moving average, currently at 31.810, which is support once again. Closer support is from the mauve medium moving average, currently at 32.940, and the nearer green short medium moving average, currently at 33.045. So this latter green one is, to my mind, it's suspect. Then there's the purple extension, currently at 32.745 of the April 24 head and shoulders continuation pattern. This had been a resistance in the past, but it now acts quite well as a support, as we have seen recently. Looking very close to the market, what last week was resistance and is now support is the small but significant congestion of the previous all-time high back in April 2011 at 33.605 and the close by 50% Fibonacci line for the whole of 2025 so far, which is at 33.660. These two have been interfering with play and may do so once again, so watch out. Looking overhead now, and we have just above the next 50% Fibonacci line, this time for the March to October 22 move at 34.175. We then come to a close-in trio of resistances that are now starting to spread apart. They are the dark blue middle time, currently at 35.310. The bright red neckline extension, currently at 35.435 of the August to November 24 head and shoulders top. And the interesting, though I'm not sure how good it would be, bright green lower time, currently at 35.890 of the broken November 23 to November 24 bullish shift pitchfork. I have been on the verge of retiring this last one for quite some weeks, as it was broken way back in April, but I've seen some good action since as a dynamic resistance. So though it's still, I thought it best still to include it. I'm now on the lookout overall for the next pattern idea.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.